Oil prices were up nearly 3% on Thursday as tensions in the Middle East escalate. The ongoing conflict between Israel and Iran has led to volatile fluctuations in the price of oil and other commodities. For more on that, I'm joined now by Carl Larry. He's Vice President of Energy Futures Clearing Sales at Marex. Welcome back to the program, Carl. First of all, Brent crude hit its highest close since January 22nd, rising 3%, as we mentioned. I want to get your thoughts as you see the volatility in the market, especially today.
Well, you know what, Elaine, the funny thing about the volatility is that normally we see a rush, a volumetric rush of people buying or selling, whatever it may be. But these days, I think what's happening now is that you're seeing the volatility increase because there's not that much liquidity. There's not that many people in the markets buying and buying and buying. A lot of people are on the sidelines waiting to see what happens. No different than what we're seeing from Donald Trump today. People, traders in the markets are looking, going, we have 2 weeks if there's going to be a decision or not. So, we really have a lot of time before we know whether it's going to be up or down or just nowhere at all.
I want to get your take. I'll ask you about the 2 weeks in just a moment, but global oil prices nearly 10% higher than before Israel's first on Iran last week. And now as we're entering the second week, how and what should investors consider, notwithstanding what the president said, but what else should they consider as they watch this play out?
It's really interesting that the dynamics of the market are very, very different now, because if you go back 20 years ago when we saw Iraq, America's only producing 5 million barrels of oil a day, crude oil a day. Now we're at 13 million barrels a day. So we don't rely on imports. We actually export 5 million barrels a day, 4 million barrels a day. So I think investors, when they look at oil prices now, it's a little bit more, it's not as dynamic of a shock to the market as it used to be, because America being the largest consumer of oil, we would run that price up and down. But now we're not relying on imports as much as we are producing our own and also supplying the rest of the world.
Right. I know here in the office, we're just talking about asking each other, have you noticed any prices at the pump go up or down yet? We talked about this 2 week sort of decision deadline that President Trump announced earlier today. What does that timeline mean for the markets? And as we know, he can say one thing and maybe in 2 or 3 days make a decision. Any predictions of what we can expect to see, really?
Well, here's the funny thing. In the markets and trading, a day is an eternity. A week is years. 2 weeks it's infinite. It's a long time, because it's not just his decision now. It's what happens between Israel and Iran between the now and the 2 weeks. So it could be a 2 week decision for him, but maybe prompted earlier if something escalates to a point where they're saying we need to step in now and make a decision. So again, like I said before, people are waiting on the sidelines, thinking 2 weeks is the penultimate, but it could be 2 days or a week and a half. Who knows?
JP Morgan saying this week regime change in Iran could have a major impact on global oil prices, as well as our correspondent mentioned, any closure to the Strait of Hormuz, almost doubling the price per barrel. What do you think is being done on the sidelines in other countries to prepare for a potential impact there?
I think that other countries are looking at, no different than during COVID. They're looking for ways around supply chain. So again, I mentioned earlier, the U.S. exporting 4 million barrels a day of crude. Can other countries bring crude in from the U.S.? We talk about China. Obviously, the U.S. can ship, to the east. But where else can we get crude? Because OPEC was going to increase. If that increase can't happen because of interruptions in the Strait of Hormuz, where else can it go? Obviously, we can reroute around there, but U.S. being a major supplier now, can we increase that supply? Can we supply more to other countries? And it's not just oil, it's gas also. So I think there's a lot of countries trying to figure out how that supply chain is going to work.
Iran's oil exports have dropped, but at the same time, Israel has shut down nearly 2/3 of gas production. We were seeing a refinery damaged. The impact clearly being felt. What are sort of the short and long-term impacts of this for the wider region?
You know, the difference that we see now that we haven't seen before is the efficiency of the way these attacks are happening. Israel or Iran or whoever it may be, they're directing at definite supply and surplus. So I think that we're really concerned about what is that strategic strike that they're looking at, whether it's either country. But I think that there's a onus on what am I going to do to impact the economy rather than impact a global picture? So you have to really be concerned about that. But the efficiency is definitely where it becomes very dangerous.
And Carl, we're talking a lot about action and then reaction. Talk about the wider impact of this continuing conflict on the current global inflation, economic growth, what we're seeing in other parts of the world as really everyone's trying to come out of this big slump.
Yeah, and that's what we talk about because oil is such a dynamic part of any economy's growth. We need oil, we need energy to see GDP grow. So any kind of disruption can really throw things out of whack where we're looking at a country trying to recover or a country trying to grow, whether it's China, whether it's America, whether it's Europe. There really is an impact, that really domino effect because prices go up, causes inflationary pressure, or causes a cutoff of somewhere where I can make money, and try to increase my GDP by having lower prices. So it really will have that ripple effect if the prices shoot up too far, too fast.